Let's get right into it. Right now, all across the country, honest, careful folks in their 60s and 70s are paying bills they legally do not owe. And look, we aren't talking about tax cheats here. We're talking about everyday people watching their money quietly drain out of their accounts year after year simply because nobody told them they could stop it.
So, are you paying bills you don't legally owe? To figure that out, we've got to shatter the biggest myth that keeps people overpaying in the first place. See, most folks think tax relief is only for lower income seniors who are really struggling, or on the flip side, that it's some crazy advanced wealth trick only for the ultra rich. Well, that is entirely wrong. The rules we are looking at today apply to you, whether you are living entirely on a Social Security check or you're sitting comfortably in a paid off house with a pension and a solid nest egg.
There is real money with your name on it out there. We're going to rapid fire through 5 specific bills that seniors routinely overpay. Plus, stick around because we've got 3 wealth-saving bonus moves at the very end. So the crucial point is perfectly captured in this quote right here. The law does not refund you automatically. You have to claim it. Being legally exempt from a bill and actually not paying it, those are 2 completely different things. The government is not going to knock on your front door, hand you a deduction, and refund your money automatically. Shocker, right? Honestly, every single person whose job it is to collect this money has a direct financial incentive to just keep quiet. You've got to know the rules and you have to act. Okay, let's dive into this. Bill number 1, federal income tax. For literally millions of seniors, your correct tax amount is actually 0, and that's thanks to a brand new provision. Get this. Starting in the 2025 tax year, every single person 65 or older gets an extra deduction of up to $6,000. And if you're a married couple and both of you are 65 or older, that's $12,000. The absolute best part here is that it stacks directly on top of your regular standard deduction and the standard extra deduction for seniors. You don't even have to itemize to get it, and you don't have to give up anything else. It's just a pure bonus. But you do need to act with some real urgency here because this law is temporary. It's only set for 2025 through 2028, at least unless Congress decides to extend it. Now, while it does begin to phase out for the genuinely wealthy, it comfortably offers the full amount to single seniors with income up to $75,000 and married couples up to $150,000. It's a massive win, guys. It can push a modest income retiree's tax bill all the way down to absolutely 0.
Moving right along, bill number 2, Social Security tax.
There is just a massive misunderstanding around this one. Some folks think their benefits are always taxed, while others think they never are. The reality? A great many people are over-withholding out of pure fear. Whether you're taxed actually depends on your provisional income, which is basically your other income plus half of your Social Security. If you're single and under $25,000 or married under $32,000, 0% of your benefit is taxable. None of it. And listen to this, even at the absolute maximum highest income tier, 15% of your Social Security is always tax-free. Always. So how do we fix this? Step 1, check your real numbers. Step 2, file Form W-4V to right-size or completely stop that automatic withholding. You've got to stop giving the Treasury an interest-free loan all year long. Make it perfectly match what you actually owe and don't pay a single cent early as a gift to the government. They don't need your charity.
All right, bill number 3, property tax.
Property tax is a huge pain point. And it's exactly where folks at both ends of the wealth spectrum mistakenly assume they make too much money to qualify for any relief. But this brilliantly illustrates how relief really does cover almost everyone. There are circuit breakers, which drastically knock down bills for lower income seniors, flat age-based exemptions, and then the one comfortable retirees always seem to miss, an age-based tax freeze. Take Texas, for example. Once you turn 65 there, your school property taxes are frozen at that exact level. Your home's value could literally double, but your tax won't go up a dime. And the kicker? There is absolutely no income limit on that freeze. It doesn't matter how wealthy you are. But remember, your county is never going to call you on your 65th birthday to offer a discount. Why? Because every dollar you save is a dollar of revenue they lose. It's totally on you. You must pick up the phone and call your county assessor. Ask them verbatim. Which programs are based on age with no income limit? Do it before those hard annual deadlines pass, or you leave money on the table. Next up, bill number 4, Medicare premiums. There are actually 2 hidden double overpayments lurking in Medicare. First is Part A, which covers hospital stays. If you or your spouse worked and paid into the system for at least 40 quarters, which is just 10 years, your Part A premium is supposed to be exactly $0. Yet, due to pure confusion about work records, so many people needlessly pay this premium. It is always worth a hard second look. The second trap hits comfortable retirees, and it's called ARMA. That's a surcharge piled onto your Part B and D premiums based on high income. But here's the trick. Medicare uses your tax return from 2 years ago. So if you retired and your income fell off a cliff, they are still charging you based on your old, high working salary. That's just unfair, right? But retirement is a recognized life-changing event. If you file Form SSA 44, you can show them your new, lower income and drop that surcharge instantly.
Okay, bill number 5, tax preparation fees.
This one is so frustrating. Millions of seniors walk into big-name chains every single year and happily hand over $300 for what is essentially 45 minutes of simple data entry on a standard retirement return. You likely don't need to pay that. Enter TCE, or Tax Counseling for the Elderly. This is a totally free, IRS-certified program specifically built for people 60 and older. It's often run by ARP TaxAid that you don't even need to be an ARP member to use it. And importantly, it is not just for low-income earners. It's designed for the broad middle class, too. If your return is just Social Security, a pension, and some investment statements, use this smart, free option. Let's move to and see how this builds. 3 wealth-saving bonus moves. Now, if you have an appreciated home, an investment account, or a healthy IRA, these next strategies can be worth an absolute fortune. Bonus move number 1 tackles the fear of selling your home. Retirees often refuse to downsize because, well, they bought their house for $60,000 30 years ago. It's now worth $400,000, and they are terrified of the taxes on that gain. But thanks to the home sale exclusion, a married couple can exclude up to $500,000 in pure gain. That's not the sale price, that's the gain. For single filers, it's $250,000. So for most folks, that dreaded tax bill they're sweating over, it simply does not exist. Bonus move number 2 is honestly one of the best-kept secrets in the entire tax code, the 0% capital gains bracket. When you stop working, your income often drops before large required withdrawals kick in. If you are a married couple with taxable income up to roughly $96,700 for 2025, the federal tax rate on your long-term capital gains is exactly 0%. You heard me right. You can literally sell appreciated investments in this window and legally pay absolutely nothing in federal taxes. No way, right? But it's absolutely true. Finally, bonus move number 3 is the Qualified Charitable Distribution, or QCD. If you are 70 and a half or older and you give to charity, even just a little bit, you can send up to $108,000 a year directly from your traditional IRA straight to a charity. And here is why this is infinitely better than a standard donation. With a standard deduction, you often get 0 tax benefit for giving, but a QCD completely bypasses your taxable income. It's like it never even happened on your tax return. Better yet, it satisfies your required minimum distributions and actually lowers the income number that your Medicare surcharges are based on. It is an incredibly powerful domino effect that just keeps saving you money. So, whether it's claiming that new senior deduction, filing a W-4V, freezing your property taxes, appealing Medicare, or using a QCD, the overarching narrative of this entire explainer is incredibly simple. Being legally exempt is absolutely worthless until you actually act on it. The whole system is built so the money stays exactly where it is unless you stand up and claim it. Knowing the rules isn't enough. You must take action. So my question to you is, which of these 5 bills are you going to stop paying today? Seriously, figure it out and take the first step. And please, do your loved ones a favor. Share this explainer with at least one person over 65 or someone getting close to it. One single share could literally be worth thousands of dollars to them, keeping their hard-earned money exactly where it belongs. Thanks for learning with me today, and get out there and claim your exemptions.